And hello traders, and welcome to another video. So in this video I want to go through the COT report quickly. So just to give you guys a bit of an example how I look at it. When I look at it, I do not tend to look at it a lot. Why? Because again guys, our strategy is based on probabilities and trading on a single time frame, because you already know that is giving us a big advantage, because our strategy is not going to be discretional, a factor of luck is not going to be present. We do not want to have a bias in the market, etc, etc. So reading COT example is a great thing when you want to really be sure where the direction of the market is headed. So basically COT report, commitment of traders report, is basically all the big institutions all over the world. Every week they need to really give us example of what they are doing. So if they're shorting USD, if they're adding to their buying position, etc, etc. And if you follow that history over the long period of time, you can see the changes that they make. So again, just a quick heads up, this is of course not the right data, not exact data. Why? Because they need to report it a little bit later. So yeah, they have reported it, for example, I don't know exactly, but for example last week they have reported it, and we're gonna see it 1 week later. So it's a little bit, late information, not exactly, on time. But again, you can see that when you have a certain big change in COT, for example, last week they have really a lot of long positions, and all of a sudden, boom, they change it in short. So you're gonna see that reflects on the price action and overall direction. So again, use COT only for direction. But again guys, you already know what I do not like to do, and that is analyzing based on all the time frames. So again, I do not say that is bad, okay? I just say that it's gonna be, if you look at daily time frame, for example, and you look at COT, and you have a single signal that it tells you to go short, and then all of a sudden you see higher probability hybrid pattern on 1 hour. And for example, 1 week is bearish, daily time frame is bearish, 4 hour and 1 hour is bullish. I don't like that. It's extra decision making for me, and we already know what traders tend to do when they have a lot of decisions, when they need to make decisions for themselves. They tend to be emotional when they make them. So this is why we have strict mechanical set of rules that we are always following, and this is why I always look at only 1 hour time frame. So I rarely check COT report, but again, for those guys who are tracking all time frames, I do not say it's bad. It's more confluence and it is good, but I personally do not like to do it, because again, it is making my strategy and my edge discretional, okay? Because I'm gonna have I need to make more decisions, and I do not want to do that. I want to base my trades based on probabilities. So this is why I only execute and only look at 1 hour time frame. But okay, for the people who want, I want to give them a video. So how can they read COT report, and how can, of course, they take advantage of it? So we're gonna open a COT report here, guys, and we're gonna see that this is April to June COT report for Euro. So as you guys can see, we're writing here long positions, short positions. So this is the amount of long positions that institutions have on a certain pair, short positions, and this is change long, change short, and total change based on the previous COT report that we had. So you're gonna see, based on this, from April to June, what have institutions done. So if you look at this date here, you see that they have this much amount of long position currently running on Euro USD. And you can see over the time that amount was going a little bit under, above, a little bit above, and right now it's going under. So it's going lower and lower. So they're closing their long positions. Especially here, they had 23K from this date. And then from this date, they massively start to close their long positions. So when they're closing the long positions and the shorts are still the same, that basically means price is most likely going to consolidate. Okay, it's gonna go sideways. But if you see a change, they massively start to close their long positions and they start adding to short positions, that can mean that the price is going to continue to go bearish. Or if they starting to close their short positions and they start to add in their long positions, that means most likely price is going to continue up, okay, bullish. So basically COT report, you can use it in your advantage just for bias, just for directional bias based on higher time frames, you know, where is most likely price action going to be headed. But again, if you're starting with hybrid strategy, I would not recommend to look at it, because it's again extra confluence that again guys, in this business, it doesn't mean if you know everything you're gonna be better with it. So more confluence doesn't necessarily mean better. Okay, I don't know if you heard the term in forex, less is more. So you know, when you have less decisions to be making, it's better for you. So let's say, for example, you saw this and you see one day something and you say to yourself, I want to buy, and then you have perfectly high probability hybrid pattern form to short, and you do not want to short it because your bias is long. So this is why I do not have a bias when I'm trading, and I do not like to have a bias when I'm trading. I'm just reacting based on price action, what's price action telling me. But again, I wanted to record the video because we didn't have it prior in the course, so just you guys, you know how to read and what to do with COT report. So so this is the thing where this date they were having a lot of long positions, and all of a sudden they close it. They start to close the long positions, and they close a little bit of shorts. But again, they were the same. Basically, there was some not so much change in short positions. So we can expect from this date here, that price goes bearish, continues bearish. And if we find that on chart, you're gonna see that this was here. Okay, basically this move here. So as you guys can see, the price continued with that direction, bearish, that bearish trend, because they continued to short it. So this is just example how, you know, you can use this in your advantage when you want to really guess the direction of the market. But again, quick heads up, this is not exactly up to date. Okay, so it's basically like an indicator. You know, those lagging indicators, they're not correct. They're always late. It's basically the same thing with COT report. So I think it's approximately, I don't know, for example, 3 days to 5 days, it's late. So they make a report, they send a report, and after 3 or 5 days, they release it in the public. So a lot of things can change in the meantime, and it doesn't give you exact information what they're currently doing, but you see overall what they're doing. You know, this is what institutions are buying and selling. So basically, when you see something that is not quite ordinarily, those times can be interesting. So for example, if they had 20K shorts here, and all of a sudden you see, boom, they close 50K. So all of a sudden you see only 150,000 here. This is a massive change. For example, you see only 2-3k or something, changed. No, nothing more, nothing less. But when you see extreme massive change, those times when you want to take advantage of it. So for example, they close 50k longs here. So they close longs and they add 50k in shorts. You see that something is happening, and that is going to reflect on the charts, certainly. Okay, so when the changes are not so much like this, you do not see that many changes, then prices, everything is normal. There's no drastic change, nothing that you can expect really. But again, when you see a drastic change, all of a sudden, boom, blast, those are times when it can get interesting. So that's it basically, guys, for this video COT report. Again, for the beginners that are starting with hybrid strategy, I would personally not recommend you to look at COT. Maybe if you're more experienced trader, then you can use it in your advantage as an extra confluence. Okay, so you can just check it every week and when you're checking higher time frames. But again, if you're starting with the hybrid strategy, I would really not recommend you to do that. So just ignore COT completely and focus on hybrid strategy, focus on probabilities, focus on everything that we're talking about. And we do not want to have a bias, and basically this is allowing us to have an extra confluence, extra bias. So yeah, that's basically it for this video, guys. Hope you enjoyed it, and yeah, see you in the next one.